Hello, Mavericks. It is nice to see you. It is the Market Roundup, and it is October 6th. So let's get into what we saw today. Let's go back to the first part of the week. We closed Friday on our lows. We closed below our June lows. And then we had a pretty big rally, a 6% rally, Monday and Tuesday. Yesterday, we had a down day, but it was a gap lower and a close higher. And then today, we got a little bit of a red candle. But really, I thought today the big story was the markets reacting to higher rates and oil prices. And really, the news that OPEC is going to cut 2 million barrels per day sent the price of oil from $78 all the way back up into the 90s. And so this hope that inflation has peaked kind of got a little bit of a blow to it today. Let's jump into the charts and take a look at what we see. As you can see here, we had that big rally on Monday, Tuesday. Yesterday, we gapped lower, we were weak for a point, and then we ran up to where we were positive for the day, and then we backed off just slightly down. But that was a green candle telling us, hey, there's still buyers out there. Today, we opened up strong, and we made a run, and then by the end of the day, we had weakened fairly substantially. Now look, this is still an inside candle. It means the high and the low is lower than the high and the low of yesterday. So an inside candle doesn't tell us a lot. But we can start to see that the momentum is waning a little bit. We've been calling this a bear rally, where just an up move in a downward market. We cannot call the success yet of this. We need to have another red candle tomorrow that goes below the low of today and also below the low of Wednesday. If we get that, then I think you can say, okay, that was the rally, that was it, and we are still in a bear market. If we get something different tomorrow, let's say we get a sideways candle or even an up candle, I still think you have to say there could be more left to this little bear rally. If we take a look at the advanced decline line today, you can see that most stocks went down today. It wasn't a really heavy red day, but it was still 65% of all stocks went lower. As you can see, the Dow lost 1%, S&P lost 1%, NASDAQ and the Russell 2000 was actually better than the rest, only down about 0.5%, maybe 0.2%. Take a look at oil. That actually closed on the high of the day, so we should likely see even higher prices here in the future, which is going to be negative for the stock market. So again, going back to the S&P, very clear here, we are at this point where either this is the bear rally, that's what we're going to get, just like we got back in September. We also got about a 6 or 7% rally here, and then we turned and fell lower. Red candle tomorrow tells us that is likely it on this bear rally, and we can go back to being more short than long. If we get anything else, if we get a sideways candle, it is definitely inconclusive. If we get an up candle, then it's telling us we are likely going to go up to the 390 area on the SPY. Let's take a look at the VIX, because I do think the VIX is important here. We've talked about every time we get up to the 32, 34 area, the market tends to bounce. We thought, because we didn't have any sort of bounce last week, we thought we were going to get a flush out at the first part of this week. We were definitely wrong on that. You can see the VIX pulled all the way back down to the 29 area, but that is looking very much like a little bull pullback in the VIX. If we get selling on Friday, I expect this to go back up into the 32 area and really set us up for exactly where we were last Friday, where we have a very high VIX and the market is under some severe stress. VIX at 32 on Friday, closing on our lows on Friday. To me, that is a clear sign that that bear rally is over and we have our next bearish leg down after that. If we don't get a red candle tomorrow, then again, I think you just have to wait and see. And if we do get a nice green candle tomorrow, I think we have some more upside. The heat map was just mostly red, as you can see here. Look at energy. Energy is the outperformer. We've liked energy this entire time. Outside of energy, there really wasn't any good news to talk about. It was mostly red. So let's talk about our market outlook. We're at a -2 on the month. We were at a -3 last week. We're up to this 20-period moving average. The line in the sand that we're watching short term. That 20-day moving average is right about 379. If we break above that, I think we move up to 390. If we do not break above that, it looks like our next low is going to be back down to the lows of somewhere around 358. Until that happens, I think you have to be a little bit patient here, because these little bear rallies, they might have a little bit more left in them. Red candle tomorrow, I think we can really count on another leg down in the markets. So I think it is prudent to move to a -2. Now, we were at a -2 for the week. Obviously, we are up about 3 or 4% for the week. That's not going to happen. Even if we get a down move sometime on Friday, I think we're still going to end up at a positive week. We'll update this in the trading room where we talk about our outlook for the next week. But here we are right here, -2 on the longer term, +1 on the shorter term. Let's take a look at some potential trades out there. Now, the first trade here is from our Wednesday trading room that we hold live with our traders. And this is where our traders, we all collaborate, we all share ideas. And this here is a nice bull flag. So bull flag pattern is you get the nice big run up, and then you get the nice little shallow little downtrend lower. Now look, this is not triggered yet. We really need to trade above this upper trend line. And until we do, this is not a bullish stock. That being said, you can see we've got some really nice support here at 200. So if somebody said, hey, I'm going to keep an eye on this one and buy it on a breakout of 210, I like that. If someone says, you know what, I'm going to do something a little bit more neutral to sideways, maybe like a short-term butterfly or a diagonal call spread, a 200, 210 diagonal call spread, okay, I can get behind that because this is acting very, very nicely. This is in the biotech sector, ALNY. On the sideways strategy, this is Palo Alto Network. So it's in technology, and you can see that it's at a range of 160 up to 190, but that 175 is right in the middle. So you really have to think about, okay, if I'm going to do a sideways play on here, where do I think the market is going? I think this next leg in the market is to the downside. So any sideways butterfly I do, I'm going to want to say, okay, if I give this thing 6 more days where I do next Friday's butterfly, and we do get a down move next week, where do I think it's likely to go to? So I'm looking at this 170. So again, this is going to be a slightly bearish butterfly over 6 days. And I think you do the 160, 170, 180. What we're saying here is we think this stock is going to go down with the rest of the market, but because it's been so strong, it's likely not going to go down as much as the market and make lower lows than it did in September. If that is the case, then we're going to have a nice little gain here on this sideways play. On the short side, this is Kohl's. Now, Kohl's has been a disaster. We got a big gap down off of probably some earnings. We bottomed out right here, somewhere in the low 26s. We had a little spike once above this resistance of 31, but we broke down here. And now we've had a nice little bounce up here. Take a look at this. This is almost 24 to almost 28. That's 4 points. Realize this is about a 16% bear rally it's had. These are just fantastic times. Whenever you see an ultra weak stock like this, whenever it bounces 16%, it's right there saying, hey, go ahead and take another short here, me. I like the 26-28 bear call spread for next Friday. That's a pretty simple trade. It's fairly short term. If we go down next week, it's going to be a nice win. If we go up, it'll be a loss, and the loss is already quantified, so we'll just move on to the next one. Another trade from our Wednesday session, one of our traders did Prologis PLD. What a great call. What a great call. The stock was down 3.4% today. Same thing, off a little bear rally, 100 up to 106. That's a 6% rally on an ultra weak stock. You could see, boom, turned down. So great job to the traders who caught that. I do not think it's too late to catch this trade. I think we are likely headed below 100 on this, but check your charts and check your targets. But I like this one on the short side, PLD. So let's talk about tomorrow. Tomorrow is actually a big day. Tomorrow we do have the September payrolls report. And we are in this period of time, and I talked about this last weekend on the trading room. And I talked about how right now, good news is bad news, and bad news is good news. Let me explain what I mean by that. Right now, people don't like the fact that the economy is so strong that they're worried that the Fed is putting on the brakes too hard. And anytime we get a report that shows some weakness in the economy, the market loves it because they say, oh, the Fed's no longer going to step on the brakes so hard. And then whenever we get a report that shows the economy is still very, very strong, the market freaks out because they know that the Fed's going to ratchet up interest rates even higher. So for tomorrow morning, the estimates are for 248,000 new jobs, 3.7% unemployment and plus 0.3% in wages. Here are the two numbers that really matter. The 248K. If it's substantially above that, watch out below. We will sell off and sell off hard. Now, typically, a better than expected payrolls report is good news in the market. Not right now. A worse than expected number, so something like 150, 180. Oh, the market's going to love that. And we likely have an up 1 or 2% day tomorrow on that kind of news. The other number to look at is the unemployment rate. The Fed stated they wanted to see that rate around 4.5%. So let's say that some weird thing happens, and let's say the jobs report was very good at 250K, or maybe even 300K, but for some reason the unemployment rate ticked up to 3.94%. Now that can happen when people re-enter the workforce that were on the sidelines. That would be good because, again, it was showing the market that, hey, the unemployment rate is going higher. That's what the Fed wanted, which means the Fed is likely to be a little bit less hawkish. If both of these numbers are bad, let's say that the number comes out at 400,000 and unemployment goes down to 3.5, again, we'll have a 2 to 3% down day tomorrow. So I'm expecting there to be a big move tomorrow. And based on where that candle is, red or green, it's going to tell me that either this bear rally has more legs or this bear rally is over, and I can go back to being very, very aggressively bearish in the markets. One little bit of earnings report tomorrow, Tilray, marijuana stock. But next week, we have the full third quarter earnings starting. It's going to be a very, very busy week. Well, that is the Market Roundup. Thanks for joining me. Take care, everybody. Goodbye.